Good morning, good morning, good morning to you. Good morning, everybody. Happy spring, happy April, happy Thursday morning to you. It is 10 a.m. Thursday morning. And as always, every Thursday morning, I am bringing you the Her Investing Coffee Talk. And I am Jessica Perrone, yours truly, your host of my, I would call it show. I'm self-declaring that this is a show. Yeah, and hopefully you guys agree, and I think you are agreeing. I have reached 1,100 viewers of the show. I am just tinkled pink. That doesn't make no sense. Tickled pink that so many of you are watching the show, learning about investing, learning the language of investing, and coming here every Thursday morning to practice it. So kudos to you, 1,100 women that are making a difference in your financial future. Kudos to you. Good job. Oh, yeah. So what I would love to do is I would love, of course, I'm goal driven, right? I'm completely goal driven. So I would love to reach 2,000. What do you think, ladies? I think that might be doable. I would love that. So let's see if we can get 2,000 ladies this week to learn and practice the language of investing right here on the Coffee Talk, broadcasting to you through Facebook, through LinkedIn, and YouTube. So welcome everybody. Let me introduce myself. I'm Jessica Perrone. I'm the founder of Her Financial IQ. And I started Her Financial IQ after I left the street. Yeah, I left the street about 3 years ago. And during this journey, I couldn't believe the anxiety women had when talking about money and investing. So what I started doing was creating a curriculum, and I do teach classes, and I have workshops, and I have programs that educate and empower women of all social backgrounds and races, and really educate them and empower them and build their confidence in the money and investing conversation. So my May courses are posted online, and you can check those out at www.herfiniq.com. My May classes are available. You can also sign up for my mailing list. I do offer different types of workshops, whether it's like an earnings season workshop, whether it's a Bitcoin. I think I'm going to do a marijuana industry one as well. I think I'm going to do that because yesterday was 420. Happy belated 420 to you. And I thought, oh, wouldn't that be fun to do something like that? So I may be doing a 420 workshop as well, just for the heck of it. Why not, right? And let me just think. Oh, Vegas, baby. So I was invited back to the money show in Vegas. I'm so excited to be going back. And it's not going to be so cold. It is going to be in May. So hopefully the pool will be open, and I'll come back a little bit more tan. And that would be May 11th. At the Money Show in Vegas, and I'll be my workshop will be from 12:30 p.m. to 1:15 p.m. I'm doing the Her Investing Sense for Beginners. Yes, I'm doing that workshop for free at the Money Show. So definitely come say hi if you are in the Vegas area, or join me poolside. Yeah, maybe you don't want to. I have to do a little bit more work before I think I want to be publicly poolside. But anyhow, I'm putting the link for the Money Show here in the chat, and I would love to have you guys come see me at the show. So let's move on here. Let me get started pretty quick. And as you come in, please say hi in the chat. I love knowing who's watching out there. Yeah, just come say hi. And I wonder if you guys, I'm sure you guys do think what I'm going to talk about today. What am I going to talk about today? I am going to start. Oh, and so don't forget to grab your identifying investment worksheet, ladies. You can do that in my Linktree link. It is in the summary of the show. You can go and grab it. So what the identifying investment worksheet helps you do is when I'm talking about different stocks and different companies, what you can do is you can actually keep track of these companies and stocks that you're interested in and start researching them and start watching them. And the natural progression of this identifying watch list, this identifying investment worksheet, is that it becomes your watch list once you start managing your own monies. Okay. So it's like the baby step to get to that point. And almost every trader out there has their focus list or their watch list that they watch. But this is a really great way to start it, because when you start investing, the biggest thing is what the heck to invest in. And I say the analogy, it's like going to DSW and every single shoe there you love and they fit. Right? So you're like, well, some of them might be cost prohibitive and some stocks are, right? But you're like, oh my gosh, all these shoes, how am I going to choose? Yeah, that's kind of like what it's like when you first start trading. Yeah, kind of. Maybe not. Anyhow, hey, Jules, it's so good to see you. Hey, Jasmine, thanks for showing up today. It's so good to see some new faces in the chat. Yay! Okay, so this week, what I noticed in my everyday life was I went to the grocery store, and I, of course, we are going plastic free in New Jersey. So I have my recycling grocery bags, right? So I have, and I was just going to the grocery store for a couple items, right? And I will preface this with, I do eat pretty clean. So when I go to the grocery store, I have my veggies. I don't usually eat meat. I usually don't. I have my nuts as my protein. And so I went to the grocery store and I just had one of those recycled bags with me. And I went to the self-checkout. Yes, I used the self-checkout. And I went, and when I got to the end, I was like, this one bag, right, was $100. And I was like, what? Say what? And I had to like scroll through. I had to scroll through the list. And like, even the woman's like, is everything okay? And I'm like, yeah, everything's, I just had to like go through. And I feel like the new $2 is now the new $5.99. Like, I don't know if anyone else has noticed this, but I feel like everything is now $5.99. Like, I don't know. Like, I just like $5.99, $5.99, $5. I'm like, wow, really, $5.99, $5.99. So the new $2 is $5.99. Anyhow, it's not surprising. And I saw this note out of Kelly Evans on CNBC. And, she says that food prices are indeed on the rise because commodities have hit highs as well. And so let me just read this little excerpt out of her note. She says, she says, food prices are back on the rise too. Corn is about to hit record highs, having closed at the highest since a drought in 2012. Corn prices are up 35% just since January. 35% since January. Wheat prices are up 46%. Oh, and don't forget that corn is often used as a feed for our meats. Okay, so that's what they use to fatten up, right? Yeah, the pork, the beef, that is what they use to fatten up the animals to make them, produce more meat. Yes. And then we have wheat, right? Wheat goes into a lot of those products that you see out there, whether it's bread, whether it's cereal, right? Whether it's pasta, that goes up there. So you're probably going to see even pasta prices going up, right? And then we have, so wheat prices are up 46%, soybeans are up 28%, cotton is up 27%. Yes. And you can imagine, right? Cotton up 27%, clothing prices going up because of materials. No wonder, and we're going to talk a little bit about this more, the secondhand stores are doing better, right? So are coming back into fashion. I'm going to talk a little bit more about this in the news section as well. And so let's keep on going here. Orange juice is up 36%. Yeah. So if your morning orange juice is seeming a little bit more expensive, yeah, that's why. And rice is only up 11% so far this year. But rice prices are now up 65% compared to 5 years ago. Yeah. So we're seeing commodity prices going up, right? So we're going to see food prices continue to go up as well. And that's a really good time. And I'm putting this in there and putting it out there because when we are talking about our budgets, right? It's known that people, when they're creating their budgets, actually underestimate what they are going to put towards food, right? They actually underestimate this. And just in their day-to-day in regular markets, right? Now with increased prices, when we're looking at our budgets, we really want to budget for increased prices coming down the pipeline. So this is something that we were even I'm thinking about, right? But it's also might be a really good time to go on a diet. Yeah, good time to go on a diet. Start your own garden. I've been actually talking about this a lot, starting your own garden. I've kind of been thinking about this myself. We did have a freeze come through, and I'm really glad I didn't start it yet. But, I'm starting to think about that garden. And of course, if you are working in your garden, you'll have less time for Netflix. Spoiler alert, maybe I'll be talking about Netflix later. Yeah, Netflix. How about that? So yeah, that might be a little spoiler of things to come. So and talking about budgeting, I talk a lot about getting your financial ducks in a row before investing. So when I talk about financial ducks, right, I'm talking about paying down your bad debt. I'm talking about establishing your emergency fund. And yesterday in my money talk sessions, I love my money talk sessions. And ladies, if you're watching from Money Talks, you make my day. I really just love the love and conversations that come out of this program. And we've been talking about savings, and we've been talking about emergency funds, and we've been talking about the various types of savings accounts out there and how the Fed increasing rates will affect interest rates on savings accounts as well. So we've been talking about the traditional savings accounts. We've been talking about the high yield savings accounts. We've been talking about money markets and CDs. So we also talked about the term liquidity. And so in this, I actually posed a question to my students. And that question is, and I'd love to hear you guys chime in on the stream, is would you put your emergency funds in a CD? Would you put your emergency funds in a CD? I'd love to see your responses. Go ahead and put it in the chat. Or if you want to pose this to me on my social media, if you want to DM me your responses on this, I'd love to hear from you. But let's talk about this. Let's talk about this concept. But first, let me define a few terms here. So the first term I want to do is depositor, right? A depositor is a person who keeps money in a bank account. Okay. So when I put money in a bank account, I am the depositor. Okay. So the next part I want to talk about is term. And term is a fixed length of time for which something is intended to last, right? So you can sign a term on a lease, and that indicates that your term for that lease, it's a year lease, let's say, your term for that lease is 1 year. Okay. So principal is my next term here, and it's a sum of money lent or invested on which interest is paid. Okay. And the last term here is liquidity. And liquidity is how easily you can get to your cash. Okay. So in terms of savings and checking accounts, they are liquid for the most part. And I'm going to tell you the exception of this rule. So I will say traditional savings. Okay. Traditional savings and checkings accounts are liquid because they can be easily converted into cash when required. Okay. And I'm sure you guys have all heard that term. Hey, Jasmine, I'm going to go into what is a CD. Look at you. You're front running me. I love that though. I'm going to get there. I love the excitement. Thank you so much for asking that question. I am going to get there right after I define what stay liquid means. And I'm sure you guys have all heard this term, stay liquid, right? Now, stay liquid means keep your money where you can get cash quickly. That's stay liquid. That's what that means. Okay. It can also mean like be able to go with the flow, right? Stay liquid, stay flexible, stay nimble, right? So these are like the financial version and your life version of stay liquid, right? Okay. So what is a CD? And this is where I am going to define it for you, Jasmine. Thank you so much for leading into this for me. So as I mentioned, there are 4 types of savings accounts. There's your traditional. Traditional is the savings accounts from your brick and mortars, right? Those, the TDs, the Chases, the dollar banks on the corner that have the building. Those are your traditional banks and your traditional savings accounts. High yield savings accounts are typically offered by online banks and typically have a higher yield because they don't have the overhead of your brick and mortar banks. Okay. Then you have your money markets. Your money markets require you to have a minimum amount in a savings account in order to receive a higher yield. Okay. That's a money market. But a CD takes this one step up from a money market. Okay. The CD requires you to leave X amount of money, whatever that amount is. And there's differing amounts for differing interest yields. And what will happen is that you promise to leave X amount of money for X amount of period in this account in order to receive a higher yield. Okay. So the pros, right? The pros of these types of accounts are they are insured, right? So that they are insured by the FDIC. And I actually talk about the FDIC and these high yield savings accounts and everything. And if you go to my video page, and let me go ahead and put my video page where you can see all of my recordings. They're all posted here. I'm putting it right there in the chat so you can actually watch. If you want, you can binge watch some of my previous shows and get up to speed on some of this terminology here. But I actually talk about the FDIC and different types more about savings accounts in the prior shows. Okay, so going back to FDIC. So, CDs are typically FDIC insured at banks, but so are the other savings accounts. So yeah, it is a pro, but all these other savings accounts that are FDIC and can be FDIC insured as well. So the second pro, it can be a pro, it can also be a con, is locked in guaranteed of return. And so it offers a clear and predictable return on your deposit over a specific period of time. Now, this can be really helpful and beneficial in an environment where interest rates are decreasing, right? Where interest rates are decreasing, that can be really good, right? However, in an environment where interest rates are increasing, who thinks this is a good idea to lock in this rate? Who thinks so? I want to hear. Can you go ahead and put in the chat if you think this is a good thing? Okay, I'm going to ask this again. I'm going to keep going and then I'm going to come back to this. Okay. And then the third pro of CDs is CDs generally offer a higher APY than traditional savings accounts or money market accounts. Okay. And we're actually going to go to bankrate.com. It's one of my favorite sites to actually going out there and seeing the competitive yields on different types of accounts. They have the competitive yields for high yield savings accounts from online banks. They have money markets and they have CDs all listed right there. So it's a really great place to see where all the competitive yields are. So, and let me just put that right here in the chat too. That is bankrate.com. Really, I love this site. I go there frequently. So the cons though is CDs lack liquidity. It lacks liquidity, ladies. What does that mean? That means that your money's locked up. There's going to be a penalty if you take your money out, right? So you do not have easy access to your cash for a set period of time. And for example, I was looking at some of these CDs on Bankrate, right? And some of these terms are 5 years. Some of these terms are 2 years. Some of these terms are 3 years in order to get that higher APY. And the highest APY that I'm looking at right now is actually 2.15% for 5 years though. 5 years, 5 years. You tell me if that's a good deal. Yeah, you tell me. Okay, so moving on here. So another con that I just mentioned is that there is a penalty, right? There is a penalty if you withdraw before the maturity rate. So yeah, do not have liquidity in these types of accounts. And guess what? You are locked into that rate. So if the Fed is increasing interest rates, guess what? You're not going to get those increases as well. No. So you will lose an opportunity to get higher paying CDs. So those are some of the pros and cons. So now going back to my original question, okay, going back to my original question here. Would you put your emergency fund in a CD? Okay. Any guesses? Any guesses out there? Okay. Well, I know that you all got this right. Okay. So your emergency fund is supposed to be your buffer for bad things that happen in your life, right? It is your go-to if unexpected things happen. So if your car breaks down and you need to get to work, you have different, like for example, with me, and I talked about this before, my boiler, blew, and it was a huge cost, and I had my emergency fund that I could pay for that out of, and I didn't have to put it on my credit card, right? So I didn't have high interest for borrowing that money to pay for that. Okay. So really your emergency fund is your buffer between your the high interest rates of a credit card, right? Or, say your credit card is maxed out. It is the buffer between you and your investment accounts in a downturn. So you don't have to take money out of your investment account at a loss. Right? So that's what your emergency fund is. So you need to be able to access this emergency money. You need to be liquid, right? You need to be liquid in case you need this money and you need it now, right? So, and I'm not talking about for a Gucci purse, ladies. No, I'm not talking about that at all. No, this is emergencies only, right? Emergencies only. So, would you put your CD? No, you would not put your emergency fund in a CD because it is not liquid. So yeah. Consider your high yield savings accounts, check out bank rate, check out those different yields and see how it can help you make your emergency fund grow. Okay, so that's that. That is your lesson today about CDs. Don't you guys feel a little bit smarter, right? And I feel so bad. I really feel bad for people that don't understand, what CDs are, right? I kind of feel bad, when people are like, oh, I got my CD and they're all excited. And knowledge is power. Knowledge is power and ways to put your money to work for you. Yeah, you have a little bit more confidence now. You know what CDs are. Okay, so moving on here. Oh, and actually, I just remembered my episode that I talk more about the FDIC and why you can trust online banks. That is in my January 20th episode. And again, you can see that all on my website. Put the URL in the chat. And you can sign up for my mailing list on that link as well, so you don't miss an episode of her investing coffee talk. So it is earnings season, and last week we kicked off earnings seasons with banks, and I just love earnings season. I know I am such a big dork, but to me it's like the Super Bowl. It's just so exciting and interesting to watch. And it's, for me, there's like so much drama going on. And, you get these really large stock moves to the upside and the downside, like Netflix yesterday. Yeah, Netflix fell 35% yesterday. Ouch. And we'll talk more about that in a bit. I keep doing these teasers on Netflix, but yeah, I am going to talk about that a little bit more. But what I really love about earnings season is that I get clarity. what do I mean by that? So what you will notice is that I notice things in my surroundings, right? And I make hypotheses based on what I'm noticing, right? And you'll hear me talk about these and things that I'm noticing, like when I walk down the street and I see people's recycling, and when I hear people talking about their travel plans, I listen and I observe. And I watch my financial news. I watch a lot of financial news. I read a lot, yeah. And then I make my own hypotheses based on my gut after reading these news items and my experiences in everyday life. And what I really love is hearing the clarity, because you hear all the street analysts chime in after these earnings reports are released. And I just love hearing all these analysts' takes, all these really smart people's and takes on what these earnings and conference calls means. So let me explain to you sort of the natural news flow progression on an earnings report. Okay, so let me explain this a little bit. So during earnings season, a company puts out their earnings report, and they're actually announcing when they are going to release this earnings report ahead of time. And you can see earnings calendars online in your brokerage account. You can find the earnings for companies that you are interested in. So you can kind of keep an eye out and know, they're going to report earnings, and there's potentially going to be a move that's going to happen in the stock, right? So the earnings report comes out first, and this is released via a press release, okay? So then mainstream media, financial media, picks up on this earnings report. They start dissecting it. And same with the Wall Street analysts. They're like dissecting it, and they're all giving their spin on what this earnings report means, okay? And a lot of these news services do it really, really super fast. Yeah, they do it lightning fast. So these companies have their earnings reports first, and then they have a conference call afterwards. So it is usually an executive of the company that goes out and actually gives a presentation on what these earnings mean. And all the sell side analysts are on this call listening to what they have to say and looking at the slides. Okay, because there's usually a slide. It's called a slide deck. The slide presentation is the slide deck that these Wall Street analysts are actually looking through. Okay, so then after that, the sell side analysts put out research reports, which everyday media picks up on. And so what these sell side analysts are doing, and let me back up. So you have sell side on Wall Street and you have the buy side. Okay. So the sell side are basically the research arm of Wall Street banks. And they're trying to, by providing this research, they're trying to get hedge funds to place orders through them. For all purposes, that's basically how sell side versus buy side works on Wall Street. Anyhow, so these sell side analysts launch their analysis on companies based on these inputs, and they come up with revised ratings and price targets. Okay, so when you hear things like XYZ, so let me just talk about what these. Let me backtrack here a little bit. Let me talk about what these recommendations are and how they kind of sound like, and then we're actually going to go into Netflix and see this actual progression. Okay, so for example, you'll hear the different recommendations of hold, which is I'm neutral. Hold on to it. Okay, hold on to this stock. And Investopedia has a really great summary on this as well. I'm going to put this in the chat as well, so you can go if you want to do more research on what analyst actions are, what the recommendations are, and how it works. Definitely check it out there as well. Anyhow, so it goes from bearish to bullish, right? And it goes from sell to buy. Okay, so there's a spectrum of it. So in the middle is hold, right? That's neutral. What they're basically saying is that this company is going to perform in line with the market, right? Just hold on to it. A buy means, you know what? This is going to do really well. You'll even hear like the street say strong buy, right? They are bullish on this stock. They think this stock is going to do really, really super well. Okay. Then right underneath buy on the spectrum. So buy is, very bullish on a stock. This stock is going to do really great. So if you have hold is center and buy is really bullish, then in between is outperform. Okay. And underneath outperform, you might hear Wall Street analysts use the terms moderate buy, accumulate, overweight, or add. Okay. Okay. So that is on the bullish spectrum of things. On the bearish spectrum of things, overweight on the left is sell. Okay. And under that, you might hear a Wall Street analyst say, this is a strong sell. Now, between center, which is hold, and sell is underperform. Okay. And you might also hear Wall Street analysts use the terms moderate sell, weak hold, weak hold, underweight, or reduce. Okay. Right. So now that you sort of understand what these terminologies mean. Okay. And I really love the chart that Investopedia has on that link I put in there. It really explains things super duper well. But let's go ahead and look at the real world example now of Netflix. Okay. So Netflix releases earnings, right? They release their earnings report and they have their conference call. And we see a huge tank, right? It was 35%. And it was a huge surprise. And this is why earnings season is so much fun, because you get these huge surprises that you typically don't see outside of earnings season. But anyhow, their big news was that they lost 200,000 subscribers. And they're forecasting that they will lose 2 million more in the current quarter. Okay, it made it the biggest loser yesterday in both the NASDAQ and the S&P 500. But the issue here is that it was a surprise. And sometimes if like Wall Street already knows about things, then, when bad news comes down the pipeline, it's already priced in. It doesn't move so much. However, this was such a big surprise because Netflix had said earlier that they expected to add 2.5 million subscribers worldwide. Yes, they were expecting to, and the street was expecting them to add. So you can imagine the street surprise when they're like, oh, this is a loss? This is a loss? Yeah. So, okay. And the joke in media yesterday was that they should actually be kicked out of the FANG. And I don't know if you guys know about the FANG, but the FANG is a term popularized, I can talk, by Jim Cramer. Okay. And it is it's a term for Facebook, Apple, Amazon, Netflix, and Google. Okay, so they were laughing and they were saying that Netflix should be kicked out of the FANG. Well, anyhow, I thought that was pretty funny. Anyhow, again, I am a financial news geek, so yeah, I was like, ha 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 ha, and nobody else was laughing with me. Yeah, so, but anyhow. This is how the street reacted. Okay, and so what I'm looking at here is actually on FinViz. I use a lot of paid for sites, but what I like to do is I like to offer up free sites that you guys can use as well to sort of get similar information that I'm seeing in my paid for sites. One of my favorite sites out there is FinViz. I love this, especially for their maps, their heat maps, their sector heat maps, and I love their screeners as well. If you ever want to take one of my fundamentals class, we will be using FinViz to look at different fundamentals of different stocks. So again, sign up for my mailing list if you want to be updated on different courses I offer in different aspects of company and stock analysis, right? Okay, so I put the link in the chat here. And what you will notice is that yesterday, right after the company reported, right, Netflix reported their earnings and had their conference call, the Wall Street firms started downgrading the stock. And you see things like downgrading from overweight to neutral. Then that was out of Atlantic Equities. And then Bank of America went from buy to underperform. That's actually a pretty big move, right? When it comes to this terminology that you just learned. And then JP Morgan went from overweight to neutral. Oppenheimer outperformed to perform. Piper Sandler overweight to neutral. Pivot Research Group buy to sell. That's a big spectrum, right? Like it went 5 research points over, right? Yeah. Stifel from buy to hold, UBS from buy to neutral, Wells Fargo from overweight to equal weight. And there's only one upgrade. And you know what? The reason, and I was looking at the upgrade and then I saw it. It's by Needham. And big hi to the guys over at Needham over there. They went from underperform to hold. So they already had the call of underperform. And now they're saying, you know what? Now it's a hold. So it seems like Needham called this underperform before it happened. So you go, guys. You guys knocked it out of the ballpark there. Yeah. And that's where, you know, these Wall Street firms, the sell side shops and boutiques, that's how they get their notoriety, when they get these calls right. So yeah, don't you guys feel smarter now that you were able to learn a little bit more about how earnings season works and the analyst actions, right? And we saw that in a real live scenario with Netflix. So let's go into why Netflix lost subscribers. And so out of Recode this yesterday morning, this is some hypotheses that they have. So the first one is, why is Netflix losing subscribers? So it says here that Netflix spent years telling investors that the fact that Disney, Hulu, HBO, Paramount, Peacock, Apple, Amazon, and many more competitors were following in its footsteps, and crucially taking stuff that used to run on Netflix and running it on their own services. Yeah, and it is a content game, right? I'm sure all of you guys agree that you go where the new content is. And yes, I am like excited to watch the new Bridgerton. I am. Don't do any spoilers, please. But you know, so but now the company says that it turns out that people are watching some of those other streaming services too. So that is what we're having. We're having a few things here in the landscape. We are having competition. We are having, you know, Netflix content on the competition, but also, right now I'm thinking like, you know, how often, and this is where that internal temperature comes in. When was the last, you know, how much, now that it's spring, now that you're going on trips, now that you're going out, how much Netflix, how much streaming media are you actually watching, right? How much are you actually doing? Then that's an internal temperature check that you can do when you're thinking about these concepts, right? And, you know, that is something that even Wall Street was cautious on. And it actually sent the other streaming stocks tumbling as well. They're like, you know what? If Netflix is losing subscribers, maybe people are migrating off of these a little bit, right? And then I was thinking about, okay, so I personally am not watching as much streaming. My daughters aren't watching as much streaming. I'm like, okay, so I'm taking point on these. And then I was like, what about video games? And I didn't really see any research reports coming out about this. And I'll talk more about video games in other coffee chats coming up, because there's a really neat, there's a lot of different types of ways to invest in the video game market. So I'm going to have to do a whole segment on that alone. But when I was thinking about the video game universe, I was thinking about my daughter. My daughter is a big gamer, and she has not been playing video games as much. And some of the things that are are weighing into this is the weather is nicer. She's meeting her friends out. They're hanging out downtown. She has spring sports that just started, so she's out of the house for that. And so we're also taking a lot more trips. We are taking road trips. We're going to do things on weekends. So we are just busier and outside more now that spring has started. So this type of behaviors not only could potentially affect, the streaming videos, but also the video game industry, right? Yeah. And so, who knows? We might see these types of reports coming out when we see some video game earnings coming out in a little bit. And this is why I love earnings season. You can come up with these hypotheses, these feelings that you're getting, and then you can see confirmation or that you're flat out wrong, like a lot of these Wall Street analysts, right? And you can actually get, confirmation on some of these gut feelings. And speaking of trips, I heard a lot of people talking about trips and travel over the last few months. And I even talked about this on my show back on March 31st. So if you want to learn more about travel stocks, definitely check out that one. I talk about travel stocks, travel ETFs, and also REITs as well. So definitely check out that episode from March 31st on the link that I put in the chat. Hey, Katrina, thank you so much for coming. I'm so glad to see you here, girl. But I also saw some earnings out of some airline stocks this morning. So American Airlines reported this morning and United Airlines reported. And both of those, had, okay, so let me read American. American soared 10% in pre-market, and these are from CNBC. Let me source my source. American Airlines soared 10.5% in pre-market trading after reporting a smaller than expected loss and predicting profitability for the current quarter. Yeah, so American Airlines soared 10% pre-market. Right. And then we had earnings out of United this morning as well, ticker UAL. Oh, American Airlines, ticker AAL. And United lost an adjusted $4.24 per share for the first quarter and 2 more cents than expected. Okay, this is where earnings season can be a little bit confusing because you might say, oh, I saw the earnings and they weren't good. Right? But sometimes it is the comments coming out afterwards in the conference call that actually change the direction of a stock. And you'll actually see stocks change directions during earnings season between the earnings report and then the conference call as well. So, and then it says, however, United said it expects a return to profitability this quarter as travel demand surges. And that is why the stock rallied 8.3% in the pre-market. So, maybe people are canceling their Netflix to go do stuff. Yeah. So, moving forward, and I did not go on vacation this past week. A lot of my friends did. A lot of them went on flights to various places, but I got an electric bill instead for $300. Say what? Yeah, my electric bill was $300. I'm actually gonna go through and have it rechecked and everything. I couldn't believe it. $300 for electric. And what's timely, and this is also from Kelly Evans from CNBC. I'm really enjoying her note. So Kelly, thank you so much for your note. I really love it. You can sign up for her newsletter. It is free on cnbc.com. But what she was talking about was the really high natural gas prices. I know I did say my electric bill was high, but listen to this, ladies. Listen to this. So really high natural gas prices So are usually $3 to $5, but this week they traded as high as $8. Yes. And I actually talked about seasonality and natural gas. And I talked about seasonal plays a little bit on my January 13th episode. So if you want to revisit it, definitely go there. But what Kelly Evans said from CNBC about natural gas this week is that it is really bad if it doesn't reverse quickly, because natural gas powers more than half of the electricity grid in the hot southern states like Texas and Florida that are soon entering peak air conditioning season. Yes, Kendra, that's you too, right? And I actually did a quick did search, and I got this from the U.S. Energy Information Administration. And it turns out that natural gas is the largest source of electricity generation in 2020. It accounts for 40%, for about 40%. Okay. So natural gas is used in steam turbines and gas turbines to generate electricity. And coal was the third largest energy source for electric generation at about 19%. Yes. Okay. So if natural gas prices are high, electricity prices are high, right? And oh my goodness, guess what that means for our electric cars? So potentially, remember how last week, I think it was last week or the week before, I did the what is more expensive, an EV or a gas car? Well, you know what? We may have to redo that again if natural gas prices do not decrease. But Kelly goes on to say, it will be even worse news if prices remain stubbornly high by next autumn, as winter approaches and roughly half the population, not to mention school and businesses, rely on natural gas heat. Yes. So this is going to be a continuing saga, this natural gas saga. Thank you so much, Kelly Evans, for pointing it out. I really love your newsletter. Again, if you guys are interested in subscribing to our newsletter, you can do so for free on CNBC. Now, talking about electricity, last week I mentioned copper, right? And this was after Goldman's top commodity strategist, Jeff Currie, said that no matter what technology you're going to be using, you're going to be using electricity. We're talking about electricity again. And the only thing that conducts electricity is copper. Yes. So you guys asked what the copper stocks out there. And this is actually what I found. And I'm putting this in the chat. It is Motley Fool's top copper stocks. I actually don't have time to get through this list, but you guys can peruse it for yourself. And what they're talking about is BHP Group, ticker BHP, Freeport McMoran, that is FCX, Tech Resources, and Southern Copper. So definitely check out the link that I put in the chat if you would like to know more about those copper stocks. What I did notice, it was a headline out of the Financial Times today, was that we have social unrest in Chile, and that has actually hit BHP. We just talked about BHP. That's one of the companies that the Motley Fool, mentioned for copper plays, but. So the social unrest in Chile have hit BHP's copper and nickel output, which fell 10 to 13%, as the company warned that labor constraints will persist for the rest of 2022. So we have more copper headlines coming down the pipeline, more supply chain. I mean, the news just doesn't get better, right? It doesn't get better. And guess what? Last week, I was talking about the implications, and I was watching the implications of the China shutdowns, right? And this week, what we saw was out of Tesla's earnings, right? And so we are seeing the tea leaves come out of this. And Elon Musk, I'm not going to have time to go into the Elon Musk Twitter drama today, but I'm sure you guys can find a lot of analysis on that. But anyhow, Elon Musk at Tesla said that a factory shutdown in China and severe supply chain pressures would put a further brake on the electric car makers' headlong growth in the current quarter. So yes, you even have that coming out of Tesla as a result of those China shutdowns. Yes. I actually did not get to everything I wanted to talk about today, and I have talked for 50 minutes already. So I am going to go ahead and just close it out with my quote of the day. I had so much to talk to you guys about. I even had tomorrow's Earth Day, and I had Earth Day headlines. Oh my gosh, there's just not enough time. And now you kind of know how Jessica's head works. But if you want to spend more time with me, definitely come next week to my show. Join my panels. Watch my panels, join my workshops, join my classes, and let me leave you with my quote of the day. I love to leave you guys with inspiration. And my quote of the day is, money is only a tool. It will take you wherever you wish, but it will not replace you as a driver. And that's from Ayn Rand. Let me repeat that again for you. Money is only a tool. It will take you wherever you wish, but it will not replace you as the driver. Yes. And that is my wish for you, to be the driver in your financial journey and even in your own life in general. I want you to make your own path. I want you to be the driver on your journey. And should you wish to take your journey in investing outside the coffee talks, come see me in my panels, workshops, and of course, May classes are now scheduled, so definitely check them out online. I'm Jessica Perrone, founder of Her Financial IQ. You've been watching the Her Investing Coffee Talk. May the markets be in your favor. Have a wonderful day. Thank you so much for coming. I really super appreciate it. See you next week, 10 a.m. on Thursday. And for everyone watching this recorded, thank you so much, and spread the word. Bye now.